Hey, what's up, guys? How you doing? Welcome to another edition of Straight Talk Cyber Cafe with Professor Red Pill. I've got Swen here in the studio with me again, and tonight's podcast is sponsored by Blackout Coffee. Blackout Coffee is a veteran-owned pro-freedom coffee company created as an alternative to woke corporate brands that don't respect their customers. The coffee in itself is a small batch roasted, bold, smooth, and strong. No bitterness, no gimmicks, just high quality beans. So this is real coffee for people who actually get things done. And unlike other big brands, your money isn't funding political activism or corporate nonsense, woke bullcrap. It supports veterans, first responders, and American jobs. The link is in the description, and it's also scrolling at the bottom of the screen. Thanks, guys, and let's get into the podcast. So, basically, we saw a major correction in the tech industry that I was predicting would happen at the end of 2025. Hashtag collapse 2025 into the first quarter of 2026. I said that we would see a massive correction in crypto, commodities, and the tech sector all at the same time. This did occur. You can look back previous podcasts throughout the Rumble. If you're on Rumble, if you're on YouTube, I have it posted. It's the big tech crunch, or the digital gilded age bust. Is the name of the podcast. I might actually put the link in the description after this podcast airs. But basically, yeah, I was saying that the numbers, everything I was looking at with hashtag collapse 2025. If you followed me over the last 2 or 3 years, you would be well informed that the AI digital bubble, or the AI bubble, was going to burst. And I think, honestly, looking at the numbers, and like I said, that when all of this stuff crashes at the same time, we call this the everything bubble. It's not me that coined that term. That's other influencers and economists have coined the everything bubble. It's been floating around the social media. But we did do another podcast on that, and I had said that basically when this everything bubble burst, it's the first stages of a dollar collapse and a greater economic catastrophe as a result of basically AI bubble burst. And this AI bubble burst, like I said in the description, like I said of this podcast, it's market crash 2.0. That basically means market crash 2.0, referring to the dot-com bust of the 2000s, the CDO crisis of 2007, and the crash of 29. Now, how is this dissimilar from those particular crashes? Well, in the 2008 or 2007 CDO crisis, it was very regional. So it mostly affected the housing market and the financial markets. And it was kind of tied to Europe and the United States. This is where most of the derivatives and most of the investment was coming from, was the United States and Europe. And it crashed those economies really badly. I believe it was Iceland. Saw like some of the worst out of all of these different European countries. Now, during that time, I was working in banking, and I went into education. I was in Korea, I was in Eastern Europe, and Saudi Arabia, the Middle East. I did not notice any type of economic hiccup in those countries. The economy was doing fine there. So obviously, during the 2007s, like financial market crash and CDO crisis, it was kind of restricted, like I said, to a regional economic situation. But this one in particular, the everything bubble, or the AI bubble, I think this is going to be a global wide economic fiasco. It's going to be a global wide panic, and it's going to affect a lot of like regional markets. I was predicting that eventually this is going to ripple through like developing economies, like say like Georgia, where I am right now. This country is probably going to be very affected by any type of everything bubble or commodities bubble, energy bubble, all these different bubbles, but mostly the AI bubble. And like I said, we'll get into that. So like I said, I have Swen here, and he's gonna give you a couple of things of what we're gonna be talking about, and we'll go from there. What's up, Swen? You there?
Hello, everyone. Yeah, today we're going to be talking about the corrections which have occurred recently in the market, and yeah, all its implications throughout the whole economy of the world, which is also tied in, I believe, to an extent, with the release of certain big batch of files. Um, right now, as far as I'm aware, um, the economy of Japan is crumbling and they are selling out the US bonds that they hold, correct? They're selling them. the U.S. bonds that U.S. Treasury bonds. Have you heard of that?
Yeah, we I think Lupiter, we talked about it. You and I have talked about it in the past as well about China, or sorry, Japan. That basically Japan is like one of the most in debt nations right now, and the out of all the big, the industrialized nations, it's one of the most in debt. I think it was at 236 percent debt to GDP ratio, and it might be higher now. I can look it up real quick, but Japan is not doing well, and they were one of the major manufacturing company or manufacturing states that was offshoring to China recently, like in the 2000s. The United States, we started offshoring in the 80s, and then basically Europe and like all the other countries followed suit. And I think Japan was like one of the last countries to start doing that. Let me look up their debt to GDP ratio. I did
I think it's.
in the main. Oh, go ahead.
I was gonna say I think it's 250 now.
Oh, okay.
Let's
Yeah,
see.
I'm
Let's
looking
see.
it up right now. You're probably looking up to. Yeah, it's 200. It's 250 in late 2024, 25. And now it's cited over 250. So I was right. It's about 236 is the last time I checked it, and that was when we started talking about it in 2024. And then now they're saying that it's well over 250. So it's one of the highest. I had posted, yeah, it's saying as high as 258%. Um, but I was one like I posted in the main channel and on the Straight Talk News channel, that links in the description. We what was it, the circle of shit, basically the inner circle of shit. I've actually got a visual here. This is from Visual Capital. I'll pull this up. I don't think it's copyrighted. Yeah, you can see right here. This is what I call the inner circle of shit. So Sudan's at the highest right now. Um,
Yeah,
yeah, so
and
you
Japan
have the
is right
U.S.,
below.
Italy, yeah, and then the outer circle of shit. And then everybody
Tell
else
the
here at the
audience what
end.
does this all of this mean um, in practical terms.
Um, you guys can see it, yeah. I mean, basically, it's I would say in practical terms, it's literally kind of a de-dollarization, hyperinflation, Weimar Republic style collapse on a global scale. And like I said, the derivatives market was pretty high. I think it's in the quadrillions of yeah, it's bad. And like I said, you can see all these different China's at 96. It's almost 100%. And they were at one time one of the lowest. Like they were at like 30 or 40%, but now they're close. They're
Let's see
edging
if you
towards
can find
100%.
my. I don't think. I think my country is not even here. We're so low.
Uh, Let me see.
Yeah,
Peru,
yeah, we're not even here. I think ours is like
Argentina.
30%. Yeah.
Yeah, Argentina's at 73. That's insane. They're one of the lowest. Israel's at 69% because of all the money America gives them. Um, yeah, Germany's actually 65. That's not bad. Romania's at 62. I don't see Peru. It's not in here.
Yeah, no, they're not there. We are like very low. We have like good economy actually, very well positioned. But yeah, just going back to this, I think Japan won't be able to pay its debt. But wait, what happens when they default on a payment?
Consolidation. Basically, um, they have to start selling gold, treasure. Like they either assets, or they have to start liquidating government held bonds, or like whatever they can. Like for instance, like this is one of the power plays that China does. They go into countries. The IMF was kind of doing something similar that China kind of borrowed from. But they would go into like these developing economies, and they would offer like loans and grants in order for them to build. And they'd actually send Chinese experts and like construction experts and help nation build, if you will. And the whole purpose of that is basically to get them dependent on China for this aid and this help. And then when they can't repay it, China's like, yeah, don't worry about the default. Just let us put a military base or a port in your country, and give us a 99-year lease on it, and we'll just wipe the debt. Not a big deal. And China's has been doing this for at least in like 2 decades all over the world. And I think in Peru they actually have a joint. You were telling me they have a joint base, or not a base, but a port there they built recently. Is that correct?
Yeah, we have like cooperation institutes as well. Like they have a big building that they made with the government, which is they called Chinese Peruvian Cooperation Center, and it's basically promotes Chinese Peruvian relations in all dimensions of life, primarily in business. But yeah, like what I'm trying to say is, it is it is very interwoven. It is very intertwined, and um, this debt, it will be collected. That I mean to say, like you said, they're gonna have to liquefy their assets, correct? So this is a matter I was gonna comment. China is just purchasing these countries, aren't they?
That's very possible. Like I said, it's becomes like when the debt gets to that point, it becomes a national security issue, and because of sovereignty, this is what we saw during the Weimar Republic, and we saw this in '70s with Nixon. This is why Nixon took America finally off the gold, any gold standard that was left, because there's no way that they could guarantee the debt with the gold, because the dollar was backed by gold at the time. Certain things were to Europe, and they
The
just
military base serves the purpose of being able to secure the resource transport if anything were to be put on challenge. That is to say, if they challenge the Chinese resource extraction, they have the military base there. And because they also have the country's elite, because they give them money, they pretty much live off the Chinese, then they can basically send the police to suppress any sort of revolt and anything. That's how those countries work. And it's quite genius because the investment is low, 2 billion, 3 billion, 5 billion US dollars, in exchange for a very high likelihood of them not being able to pay the debt, which means like a high, it's like an inverse, it's like a, you want them to default because them defaulting equals profit.
yeah, I mean, pretty much. And this is all related because like Japan is also related to the AI bubble as well. So they're definitely there's a lot of tech and a lot of
I think the AI
investment.
bubble, like I'm gonna just say it again. I always say it, but I'll repeat it. It's a covert, worldwide government surveillance, deployment of infrastructure, deployment of surveillance infrastructure, and it is being marketed or presented as to the public as a commercial operation. But if you look at the finances of OpenAI, XAI, all of these AI companies, they're all in the red. They're all in the red by tens of billions of dollars. They are not profitable. This AI chatbot thing is not uh, projected to be profitable, and this is why economic experts worldwide are uh, telling their audiences to stop investing into this nonsense because it's not projected to make economic sense in the future at all. It's a big grift. It's the biggest grift to have ever come across the whole face of the earth. And the ultimate purpose is to keep all of your actions automatically policed. Automatic policing.
Yeah, I mean,
Smart contract.
we talked about
Right.
this last podcast with with Mad Max. We broke this down with the AI algorithms and how it can be used as a system of control, because you got to think about who's funding AI, and it's mostly governments. That's the thing. That's why China is at 97% debt to GDP ratio. They're one of the leading investors in AI, from what I understand, outside the United States, and like the usual suspects, like the capitalist societies. Um, so I mean, that's the thing, and it's why are they investing in it? Military application. That's the main reason. That's why that's what the West or the United States government has been saying is that they don't see it as a very good investment, at least the Trump administration. But they said they're investing in it anyway because they don't want China to take control of AI and have the edge. So we're back to like basically the Cold War and like Soviet Union, United States with the space race. And also you can go
They
back
they
and the
had a
Manhattan,
test bed, you know.
yeah,
I was gonna
yeah,
say
the
they had a
Manhattan.
test bed. Go ahead, go ahead.
I'm just saying the Manhattan Project as well. That was another like race to the atomic bomb and nuclear energy. So I mean these are things. This AI is just basically another space race or another Manhattan Project. And I mean right now America's leading it definitely, but at the same time we both I would say agree that it's fake and gay. That's the reality. It's fake and gay. It's not really AI. It's not sentient. We're hundreds of years from that type of technology. And in order to have sentient type AI, we require the amount of the energy requirements would be unfathomable. I mean, it's like almost like a type two level, like civilization to have that type of energy capacity to be able to have a sentient AI type system. The computing power is not there. The energy level is not there. It's yeah. It's mostly just a glorified super Google search engine. That's all it is. Um, that's what I
That
see
is
it as.
what it is for the most part, right? You use AI, you ask it, hey, what is such and such, and it will either perform a calculator function, so Wolfram Alpha, and then it'll compile information about factualities, uh, data sheets, and so it'll pull the information from there. And what we basically have is previously in 2015, 17, 18, you were to type a long question in Google and it will not be able to answer you. It'll just come out with irrelevant results, or it just wouldn't be helpful for the most part. But now you can ask long questions to the search bar and it will give you an output which can be of use to the information that you're looking for. You still have to double check it because it can be BS. So always you're meant to ask for primary sources when it comes to anything that is critical.
Mhm.
I've had to correct AI several times. I've had to tell AI, no, you're wrong. This is not how it is. That's not true.
Right.
It's not located in that page. The citation you gave doesn't lead anywhere. And it's had to apologize to me. Yeah.
I mean, I work in academia. We're my university's one of the leading researchers in my country or the country I'm in right now for AI. And I teach digital marketing, so I work in AI research. So I mean, I'm fairly knowledgeable, which is why I talk about it and why I find it interesting. But more importantly, I also teach business studies. So in business studies and business strategy, I just don't think AI is a very good business strategy to invest in. And you pretty much pointed out why, because it's a money pit, and there's no real usefulness to it other than a utility tool for maybe academics like myself, for scholarly information and research. It helps alleviate a lot of burdens in research. But again, like you said, when I'm doing the research or using it as a tool for research to help me research, it sometimes doesn't give me accurate data or relevant data, and it takes a lot longer to compute and put in like I have to put in parameters and all this, and sometimes it doesn't give me relevant information or it gives me inaccurate information, because basically at the end of the day it's just scrubbing the internet for information. So you're basically
Like if it's
using
not
it.
specialized, if it doesn't have enough contributors, that is to say, an
Mhm.
AI contributor is someone who will actually correct the AI and tell it it's wrong. And this
Mhm.
is why you're able to get mostly accurate information when it comes to mainstream topics, because people are correcting the AI constantly. But this can have a double-edged sword. If the developers of the AI don't have good protection mechanisms, um, someone can come in and like say to the AI, actually, that's wrong. That's not true. Even though the information is accurate and is correct, you can like hoax the AI into thinking or into believing or into being convinced in a pseudo one state that No, actually, this is a false piece of information or a true piece of information, but you're just feeding it bullshit. And many of these AI companies don't have good protection mechanisms against this sort of, they call it AI hallucinations, but it's just the data didn't come out of nowhere. It's being fed into it. You put BS in, you put in shit, and it spits out shit.
I mean, that's pretty much what I've been seeing because, like I said, the universities like they asked a lot of us if we wanted to do research in AI, and I'm like, they even had an AI conference, and I was like, I'm like, dude, it's a bubble. Like, what do you mean? It's like it's baking gay. It's just a bubble. It's basically um, the best way to describe it is a derivatives market. It's like the CDO market. It's just basically people are gambling. That's it. It's just paper traders are gambling, and that gets into why it's a bubble, and that's why we're seeing the why we saw the big stall out. I mean, XRP saw a 67% drip or drop and within a year of trading. Bitcoin, I think, saw a 23-30% correction. And this is in a short period of time. Gold and silver, again, 30-40% correction. I don't know if silver or gold was that much, but there was a massive correction. It's recovered now. And I think silver is probably going to see a short squeeze as a result because the demand is a lot higher than the paper traders are pushing. The short people or the short traders are trying to short it on paper. But yeah, it's. I think it's just people are going and gambling. I think that a lot of AI, just like the dot com bust, it was the same thing. Stock traders or the paper traders were basically pushing these dot coms. And I mean, they're like, for instance, there was like some company or some dot com company that's the startup, and they had like maybe 2 employees or 3 employees, and just because they had a web page and there was dot com in their company name, their corporate filings, there were people in the pink sheets like putting in millions of dollars into these companies that went bankrupt. So a lot of people lost money during the dot com bust, and that's going to be the
And
same
it's
thing
so
with the AI
insane,
bust.
right? Like the kind of it's insane the kind of institutional sway that this sort of people have in the manner in which they can convince people to invest in completely irrational, financially speaking, products, and they tell them, yeah, this is a good product. Like it's pretty much like, what's the name of that guy? Steven Kramer, the one that comes
Yeah,
in like Bloomberg or NBC and
yeah. The
tells
Kramer,
people,
yeah, the Kramer
yeah.
guy. He's like always wrong, and like they have a Kramer index where like basically everything that he calls like just basically invest in the opposite, and like you'll do better. He was one that said Bear Stearns was going to like go to the moon, and then like it ended up filing bankruptcy like not even a couple months later, a couple weeks later. Apparently, this was right before the 2008 crisis.
He seems like a rug puller. That is to say, like they tell him, "Hey man, push this for me. Like push it, push it, push it," and then like they just take the money away from everyone. He's just like a money collector. He hoaxes you into buying shit that they'll steal from you.
Yeah, exactly. He's a grifter. I've got actually got the Kramer. This is on the Reddit. The inverse Jim Cramer ETF S&P 500. I don't know if you can see that. I think it's like, yeah, there you go. So, let me get this a little bigger. So so basically this is the stocks like in the bottom part. This is the stocks that he quoted as like that we're going to do well, and then like the above is like the stocks that like basically they like the opposite, and the stocks that he said that wouldn't do well, and it's like basically inverted. Wow. I
I
mean,
hadn't come across that, dude. That's so funny.
yeah, it's pretty.
Wow.
It's a big running. It's a running meme on like Wall Street Bets and like other Telegram, and like I said, obviously on Reddit. Go to Reddit, man. You'll find all kinds of funny stuff like this. The like Reddit really is because it's anonymous. And back in the days, like Reddit was like really yeah, it is what it is. But if you ever have a question about something, or like like any topic or anything that's maybe somewhat controversial, or like even like I wouldn't necessarily say they're go there look for economic advice or financial advice, but you could go on there and kind of listen to what people are talking about and kind of get a general idea of like what's probably the reality of things, just because people are anonymous on there. Um, Versus a lot of people on social media, they really, it's a lot of image based. So people are people are getting paid, and if they're not getting paid, they don't want to ruin their reputation by making outlandish or like bold claims. So they go on Reddit and they basically make their comments there.
Yeah, and you know what? Like when I brought up Jim Cramer, not out of nowhere, because he is a personality type. He is an archetype. We can say the grifter archetype, and such manner in which he promotes all of his stuff is highly charged with sentiment. It is demagoguery. This guy's a demagogue of sorts. Um, Anybody who is trying to to push something to you without actually, like, you have to expand upon what you're looking at. You can't just throw money blindly into the air. What somebody tries to tell you some nice words and some tries to show you up to you some nice charts. They can be scammers. Their company could be insolvent. Their company could be not profitable. But what? Because it was nicely presented to you, you're gonna put 10,000, 20,000, as many money as you've been impressed to put in. That's crazy, and that defies human logic and reason. And but that's what they take advantage of. They take advantage of emotional impulse of people, which is the overwhelming majority of the population.
Yeah, I mean, pretty much. Suckers, basically. It's literally like during the depression. There was a saying that came out of the depression that when you're a shoe shining guy, the guy that does your because everybody would get their shoes shined or whatever, but they were saying like if your doorman or the guy shining your shoes is giving you stock quotes, it's time to get out of the market. That was a saying that came out of that era. So I mean, when you have people listening to Kramer and like, you know, people on Telegram or Reddit or whatever saying like, "Hey, invest in AI and this because it's like the next big thing," and it's time to get out. Like, yeah, it's a bubble, and that's all you're hearing. The rhetoric is like,
That's a
cryptos.
nice way of putting it. Like no, listen, bro. Like, um, in 2018, do you probably remember this? 2018, everywhere, dude. Buy crypto, buy Bitcoin, everywhere, dude. So many commercials, entire companies made around just pushing Bitcoin. And then in 2018, it took like a big fall.
Mm.
It fell like 30% or so. And I lost money. I got hoaxed into it, but it served me as a learning lesson.
I mean, it's a utility, it's a commodity, and like I said, as I talked about with commodities before, commodities are dictated by the market and demand, and crypto is only going to be in demand when it's used as utility as like a alternative currency. And now that we're talking about this, I wanted to get into the dollar collapse scenario. This is the main reason, the main driver why I think that we saw this massive market correction. This is part of it, plus also the Epstein files that we're going to get into as well. And those of you that we're going to actually go deeper dive into that actually because we can't have it on social media due to I don't want to get too controversial on the main channels, but it'll be on locals. So those that are following us on locals, just stay on, and we'll go to locals. But if you guys aren't signed up with locals, just in Rumble, you can click in the link. It says join. Go to locals, and then you can join us there. And then also on YouTube and Twitch and everywhere else, it should be in the description. Um, but yeah, it's anyway. So collapse of the global markets. Basically, what's very plausible for the dollar crisis is that we'll see basically global trade settlement, sovereign debt markets, commodity pricing, and banking collateral. So a rapid loss of confidence in the dollar. This would result basically in a liquidity freeze, asset reprices across equities, bonds, and real estate, margin calls, and forced liquidations worldwide. I don't think we're at that level yet. And of course, this wouldn't look like 2008. It's going to be much faster and more global. So 2008, like I said before, it was very regional. It was between Europe and the United States. This one will be a global wide epidemic, and an epidemic in the sense of economic epidemic. So you'll see a massive, like I said, when it occurs, we saw the first hiccup last year, when tech stocks took a nosedive, and then crypto correction right around tariffs. When the tariffs were Trump's tariffs, we saw a huge uptick because of the elections, and then we saw a huge crash because of the tariffs, or correction, if you will. This time, like I said, when you see commodities, and they said crypto is a utility, just like gold, silver, and oil, and everything took a dip. It was the everything bubble. So even oil took a dip during this recent correction. S&P, Nasdaq, especially in tech stocks, and that's what I'm saying. This is a de-dollarization. This is the first hiccup of the confidence in the dollar and confidence in AI and tech industry as a whole. So, yeah, basically regional conflicts, and these are all precursors to um, a dollar collapse. What a dollar collapse would bring. So, regional conflicts, like economic stress equals political instability and conflict. So when governments can't fund subsidies, energy and food prices spike, and currencies weaken, like we've been seeing, leaders often externalize pressure via border disputes, proxy wars, and nationalist mobilization. Are we seeing that now? Yes, yes. This is already visible in multiple regions. We're seeing it in Georgia, national movement. We're seeing it in the United States with the anti-immigration Trump mega movement. We're seeing it in Eastern Europe. We're seeing it in Russia. We're seeing it in China. We're seeing it all over the world. And not only that, but the border disputes between Karabakh, Azerbaijan, and Armenia. We're seeing Ukraine-Russian conflict. That's been going on for 4 years now. We're seeing in South America. There was a conflict there between, I think, was it Venezuela? It was up in northern South America. I forget. Thailand. There's conflict with Cambodia. India and Pakistan. Israel and Iran. Israel and Syria. Um, Israel and Lebanon. So I mean, like these have been happening all over the world, and this one, like I said, this is very visible in multiple regions right now that we're already seeing. There's trade wars, almost inevitable, right? So in a dollar crisis, countries hoard strategic resources, expand energy, food, metals, tech, or sorry, export controls, expand, i.e., energy, food, metals, and tech, and then sanctions lose effectiveness, so tariffs rise instead. We're already seeing that now, right? We saw that with currently China's hoarding gold, they're hoarding silver. They control 70. I think they control, it's 70 or 80% of silver in China is controlled by the state, obviously because China is a tech industry, a very tech savvy industrial capacity. They're one of the leading manufacturers in the world, and they need a lot of silver because they're the leaders in solar panel construction, tech, like mobile devices, electronics. So silver is a very essential metal. It's an industrial metal for China. So they've put restrictions on silver bullion to be leaving China, the mainland China. And like I said, there's more to come. You're gonna see. This is one of the main things that you will see with a dollar dollarization or dollar collapse. Right now, we've checked off basically 2 out of the 3. So collapse of global markets hasn't happened yet. I think we're at the first stage of that at this point. This is kind of the last part of that the dollar collapse. But we have seen regional conflicts and trade wars. Then there's mass migration. One of the most underestimated effects is currency collapse plus food, energy, inflation. This is like failed states, urban unemployment, rural displacement. Where have we seen this already? Venezuela. We've seen it.
Yeah,
Where else? Where other places have we seen it, Swen?
the places of economic displacement.
Yeah, so
Bolivia.
currency. Yeah, Bolivia, mostly South America. We've seen it in Africa. We're seeing it in, uh, I would say, parts of Europe, maybe a little bit, not completely,
There's
but
entire towns, or entire like small towns in America that are like disintegrating, falling away, and being abandoned as we speak.
yeah, yeah. I mean, that's like the Rust Belt, like Michigan, like Detroit, Ohio. Yeah, there's a lot of places like that, and that's been going on since the basically the offshoring of manufacturing. But this is on a national level. Basically, urban unemployment. Like right now, there's high unemployment in like a lot of like Eastern Europe, Asia. America's actually not doing too bad with unemployment right now, but this is becoming a very concerning issue, and we're starting to see
When it comes
this.
to unemployment, we have to go back to the industrial revolution and before. Before the industrial revolution, 90 plus percent of all people were employed in the field and assigned to the upkeep of the farm and to the agricultural processes, agricultural economy. After the industrial revolution, this percentage of the population which worked in the fields reduced, what was reduced gradually, from 90 to 70 to 60 to 50 to 40 to 30%, and today it's like around 5%, 10% of the population on average work on the farms in industrialized nations. And because all of the processes have been automated or delegated to machines, and now more so with AI driven machines in the fields. So what happens? Food is critical for survival, but that necessity has been met uh, through machines, leaving expansion into other industries such as automotive, such as like electric, uh, and actually there was like a big expansion in the work possibilities. Now people could work so many other jobs, but now that we have enveloped, now that we have expanded onto all of the spheres of technology that were ever relevant to human upkeep, then if we are to truly isolate all of the essential jobs which make our society be possible, our society to be able to be run, it's around 25% of the workforce, probably less than that.
Yeah,
So we have 75 to 80% of the workforce working in what? In the service sector. And some of the service sector you could argue is like kind of indispensable. We kind of do need some restaurants, we kind of do need some like stores, but you can only have so many of them. So many people are doing gigs that are going out of relevance, and so
yeah,
many administrative positions are being replaced with AI. Millions and millions and millions. So it's like the word of the game, the word of today is mass poverty. That falls in consequence and that falls in line with the debt crisis that is experienced worldwide. And this is something that will happen. We have already seen mass prostitution higher than Weimar Germany, but it's presented
yeah.
on
I'm
like
seeing it too here in Georgia. I'm seeing it here. I mean, if you include the cam modeling and like OnlyFans and all the other types of like online, like we're talking about gig economy, by the way, guys, for lexicon purposes. So like the gig economy, especially like with Uber, Lyft, and DoorDash and Walt and all the other types of delivery apps. This stuff is this is part of that gig economy where people have to resort to secondary jobs and even use it as a primary job. But yeah, prostitution, even e-prostitution, it's on the rise and it's unbelievably rampant all over the world. But yeah, go ahead. Sorry.
and now we're I really hope that we're able to see an end to it because of AI. AI might have been a blessing and a curse. They hopefully all of this becomes saturated with AI porn models, and basically it drives down that outlet because it's not cheap. That is to say, it's not free. If women of a certain population engage in online prostitution, this decreases the whole value of that whole region because they have less, like, why would you want to live there if all the women are prostitutes? You know what I mean?
Yeah.
Why would you want your
Yeah.
family to be raised in that neighborhood if all of the girls there do OnlyFans? Not to say that it's that widespread, but it's like a big problem. and these girls don't know anything else what to do, bro. Like they have not been properly integrated or taught, or they have not willed to learn properly. They have willed that they want it all easy, and now they will pay the big consequences because all of this OnlyFans revenue is about to go out of the window.
I think it's more than just like the OF and like the cam modeling and like the e prostitution. I think it's also influencing because when I'm on Facebook and I see it predominantly, like I see it prevalent throughout Eastern Europe, like Russia, Georgia, like all of like Eastern Europe. I'm seeing like everybody wants to be an influencer, and all these different like women that I see like on Facebook, every single one is like influence. They're using TikTok and like Instagram, and I'm not saying they're e-girls, like they're not OF models or like cam models or anything like that, but they're basically e-girls. They're like wannabe models and influencers, and
They want to be stars, yeah, like attention, numbers, and like a lot of this Indian bots or Indians watching, and they are like, "Oh, so many numbers! I'm so grateful," and it's like, okay, well, if that makes you feel better. But even then, so that you can only have so much audience. There can only be so many stars and population. And you know what? I'm so tired of listening to these people, not only to the influencers, but also to the people who want you to become an influencer. So it's like, do these three easy steps and you can upgrade your digital life and become an influencer and such and such. We are in 2026. All of this is very saturated. If you want to be an influencer, you have to be a very serious, consistent person. And what are you gonna do? Some clownish shit like everyone else is doing in Kick.com? What's gonna distinguish you from the other 10,000 clowns? Why are you a better clown?
Yeah, and I mean basically they're just copying each other. There's no there's no authenticity. There's no like creativity. It's just basically copy and paste. It's cookie cutter at that point. So, and like I said, it doesn't pay out anything. Like these women that are like and not just women but men as well. Like both sides, like they're not making any money from it. All they're doing is just they're wasting their time trying to grift and trying to make income off of something that they're just not talented in. Most of these influencers, especially influencers I bring on here from time to time, a lot of them have media training. They've either gotten media training through their company that they work for, like what was it, Raymond for Raymond's Thoughts. He worked in digital marketing before he started broadcasting. So he's got media training. He's a professional media outlet. Terrence Popp was an NCO in the military. He has media training. These guys already have the tools to become influencers. That's why they have so many followers. I have media training, guys. I studied communications and English at undergrad. And I studied at one of the top schools in the United States for mass media journalism and what I'm doing now. And I've been in studios since I was in middle school doing, news reports and working with tech and different stuff. I've interned with radio stations, media places. I have a lot of contacts and social media as well as in radio and film. And I mean, like that's why this content's pretty decent. It's not bad. I mean, I'm not saying it's great or anything, but there's a reason why I've been consistent. The reason why you guys are watching because I've had the media training. But someone that's wanting to get into this that doesn't have the background or hasn't worked in media, the odds of you being successful at this is not very good. You know what I mean? You're really running, an uphill battle at this point. But I digress.
Yeah, we digress. That's just we were just focusing on a aspect of the gig, a desperation economy. It's a
Right.
economy of desperation. Give me money. Give me work.
Yeah.
And it's not great. What? How do they? What's the word that they use for? Okay, yeah, it's like one step away from being beggars.
Basically, yeah. That's what a grifter is. So a grifter is basically a beggar. They really have no type of like influence or any type of service or any type of like anything that they can really contribute other than the fact that they're just grifting, they're begging. You don't hear me say, please super chat, please do this. It's like, no, man, it's support me if you want to. Go to locals. And the thing is with locals is I provide really useful information. I'm a professor by trade. I'm an educator. I've been doing it for almost 20 years now. I worked in banking. I have a lot of experience. So like I'm giving you my knowledge and my information, my analysis. That's why people come. That's why we have we have so many watchers right now watching the content. You guys can see the clicker in the top right corner. Um, I mean, it is what it is. And in locals, like I said, I provide my books free. Um, Eventually, it will be published on paperback, and like I said, it's still working on it, and you guys get access to it as I'm working on it through rough drafts. And it's an academic book. I'm going to be using it in teaching at university. Um, and then you get different insights. You get like I post my lectures on there from time to time from university. So and people pay big bucks to watch to attend those lectures. By the way, their students are paying a lot of money in tuition, so you guys get access to that as part of the service. So a lot of people don't provide that. I mean, you have Andrew Tate, for instance. I don't even know if he has media training. He's like what you would call the grifter with Hustlers University, and like I saw the Hustler University stuff that he had posted. I don't want to be bashing people in this podcast, but I mean, there's nothing really there. It's just I'm a cool guy. I've got rented cars and Bugattis, and here's some cute chicks, and he's like he's doing a hustle thing, a grifter thing, and it's just there's not there's nothing of real value there. Um, but you do have social media influencers that are professional. They do have media training. They are experts in their field. Tucker Carlson being one of them, and they deliver really good content. It's very entertaining, so you're getting something out of it. But yeah, the gig economy is great and all, especially in service, but it's quickly being saturated and it's quickly being replaced with AI. That's the downside of it. But AI is what we call in academia the fourth industrial revolution, and as all industrial revolutions before, like you started with the podcast you talked about agricultural output. Before the first industrial revolution, 80% or 90% of workers, laborers were in the agricultural industry in the United States and England and most of Europe. And after the first industrial revolution, there became this urbanization with manufacturing. Second industrial revolution, cities started to be forming and big, massive industrial capacities started. And then the third industrial revolution, that's what we have, the digital, the tech, the computers and software and things of that nature. It went into service-based economy. And then now the fourth industrial revolution is AI, and we don't know what's going to happen. But I will say, I think it's a grift. I think it's a bubble. But the thing is, .com was a bubble, but now everybody uses digital platforms, and they use cloud storage, and they use digital platforms and websites and apps, which is from the .com era. Netflix is from the .com era. That was they were one of the rising phoenixes, so to speak, that came out of the ashes of the .com bust. But now we have AI. It's anyone's game. I think there's going to be a lot of and I've talked about this many times. The digital age bust is the podcast where we broke this down and talked a lot about this, and even predicted this particular bubble that just seems that first that we're starting to see the big pops in the bubbles. But like basically, I think Meta is going to be one of the it's going to be like the Lehman Brothers. I think Zuckerberg and Meta is going to be probably the first to go down. We saw this
To go
earlier in
down
the
where?
year. Oh, to collapse, file bankruptcy, get absorbed by some other big collaborator. Probably.
Meta is very well established. I might have to disagree with that. Has like a huge foundation.
I think it'll
Thankfully.
get absorbed. I think it'll get absorbed by one of the other AIs. I don't think. I think it'll get bought out. It'll be. This is the time I'm predicting as far as business strategies, predictions. I think that we're going to see a Reaganistic type, Gordon Gecko type situation, like we saw in the '80s, where mergers and acquisitions became prevalent on Wall Street. And I think we're going to see that with AI when the bubble burst. I think you're going to see a lot of bigger corporate conglomerates and investment firms and venture capitalists start to buy out and merge and take over these corporations. And it won't be, like I said, I think Meta's either going to merge with another software company, or it's just going to get bought out, or it's just going to go bankrupt. One or the other. So something's going to happen. And like I said, it doesn't necessarily have to be Meta. it could be any of the tech giants. I think there at the end of the day, there's going to be further monopolization of the tech industry and AI, and you're going to come out with maybe one or two major AI companies, and you're going to come out with maybe one or two or maybe three big tech companies. And like I said, mergers and acquisition. That's the name of the
Yeah,
game.
I mean, it makes sense because um, it will never be profitable. Yeah,
Too much
especially
competition.
when, yeah, dude, like too much competition, too much yeah, too much competition, um, and not only just too much competition, but the investment model, the amount of infrastructure required, it's so many billions of dollars, it's tens of billions, and every year they spend more, and they never get their profit back. They're never profitable.
Yeah, it's circular investing, circular lending. This is one of the things that they're talking about. This occurred during Wall Street as well, in the before the 29 crash. So I got a question here or comment. Mr. Hat says everyone's saying markets crashing tech stocks, but we just hit 50K. Bitcoin is down. Yeah, yeah. I mean, like I said, it's everything's going to be down. Like I said, it's everything bubble, and it's a result of the AI bust. The big. I call it the digital the gilded digital age bust is what I referred to it as, and I said it would happen by the end of first quarter of 2026, which we're in now. It says Dow hit 50K. Bitcoin is at 70. Yeah, yeah. It's a dick cat bounce. It's got to recover because it took a huge dip in like less than 48 hours, like in 2 days. And if you look at it over the year, it did a gradual decline, and it's gonna recover. So it's called a day cat bounce, where it's going to go up and then it's going to continue to crash. So
I have I, I when it comes to Bitcoin, I'm not an expert. This is just my observation. Because the EU, the American elites, Chinese, all of them have said that they will put into legislation very strong regulations regarding digital currency and
mhm.
where it can be sold and where it can be bought. I believe that Bitcoin will will go down in price, very close to zero. It'll be less than 10,000, less than 10K in the 2030s because of the nightmare that it will be transferring it and using it in general. It'll be very inconvenient. They'll push everyone into CBDC, and you know what? Um, Trump himself, um, Trump himself, a few days ago made a comment about he wants to transition the financial backbone upon which the all of the transactions take place in the American system. He wants to modernize it, and he said to bring it to the era of the 21st century, which includes crypto technology, basically implying that he wants to bring forth or bring about or announce the bringing about of US dollar, which is crypto. It's a crypto dollar.
Mhm. Yeah, that's one of the possibilities is that this is what happened during Weimar Republic. Let me get into this real quick, and I'll answer that question. I just want to get off of Mr.
Yeah.
Hat here. So Bitcoin, like I said, over the last 6 months, it actually recovered a little bit. It's down 37% over the last 6 months, and that's what I mean. If you look at the timeline, it's in decline. 90-day trading average, I think was the 30-day trading average. 30-day trading average is 24%, and of course it was down to 62,000. So it's definitely down. Like I said, it did cap bounce. It'll come up a little bit, and then it'll start dropping again, most likely. I'm not. I'm not. It is what it is. I'm not saying the investment advice or anything like that, but dead cat bounce. And like I said, in a long enough timeline, it'll probably recover. But in the short term, it's gonna. I think it's got more to go. just because, like I said, we're a major correction territory with the everything bubble and the AI bubble that's going on right now. But to answer your question, Swen, you were talking about what were you talking about again? Sorry, to refresh my memory.
I was talking about CBDC and how Trump
Oh yeah,
said
yeah.
he announced that he wants to refurbish the system of financial transactions, the underlying infrastructure upon which it is built, and he says it needs to be transitioned to crypto, and that's what I was saying. Yeah.
Yeah, yeah. I mean, that's like I said, Weimar Republic. That's how Germany got out of the massive debt that they had. I believe they were still using it. They used the Deutschmark to pay off the debts because that's what the original contract was in, the sanctions, and then they used the Reichmark, I think, within the actual country, and they had a separate currency. So they had a currency for foreign debts, and they had a currency for internal economy. And I think that's probably what Trump is going to. I said that that's probably what's going to end up happening in the United States. That's the way to get out of the debt because you have the dollar, which is a reserve currency, and the petrodollar. So it has a very strong buying power outside the United States. But as you can see, like we talked about in the green room before we went live, that I was talking about, that the U.S. Is the most expensive country to live in right now. It's very expensive to live in the United States, and that's because of the massive inflation domestically inside the country. So he may end up just saying we're gonna issue a digital dollar. It's only going to be used within the United States, but the U.S. dollar will still be legal tender, and but it'll only be for foreign debts. So, like I said, because the foreign debts are in dollars, they can't just issue a new currency and say, "Hey, we're going to pay off these foreign debts with digital dollar." So what I think is going to happen, what I'm predicting is going to happen is he will do a digital dollar or like a crypto, and it's going to be internally for the United States for basically residents, permanent residents and citizens for public and domestic debts. You probably pay taxes with it too, because some states you're allowed to pay debts with you're allowed to pay taxes with gold bullion in the United States in certain states. I think Utah is one of the states. There's like three or four of them. I digress. I'm getting to the point though, basically that a digital currency would be more advantageous internally in the United States. So that way it's more control, so they can see what you're buying, and that way they can get their tax revenues. Do you see where I'm going with this? And then anything foreign, as far as debts
Yeah.
foreign, will be you can still use dollars through the SWIFT system, and then basically just pay off foreign debts, and that money is basically worthless, but it's still being traded abroad. You see what I'm saying? So it still has value outside the United States, but inside the United States, it
That's
probably
a
will
good
have no.
strategy. You know what? Like that prediction might hold up to time. It might hold up. It sounds very
It
plausible.
happened before. It's happened before. It's happened in Rome. It's happened in Weimar Republic. It's happened many times in the past. So it's like I'm just speaking from past, debt and currency devaluation, de-dollarization.
We'll pay your
Um,
debt, but our citizens will no longer use that money. You
100%.
can have your
The way to fuck everybody again.
debt.
The whole point of the petrodollar in the U.S. Treasury bonds is to basically fuck other countries over. So while America gets rich, it's been that way since post World War II. So Mr. Hat's asking, and he says, "Do you think they're aiming to lower the dollar's value?" I don't think the dollar. The thing is the dollar is an internationally traded currency, fiat currency. So the value is based off of foreign trade, money coming in and out. So the dollar devaluation is a result of inflation within the United States domestically, but also in trade. And it's still a very powerful currency at this time. So the countries use it as their secondary currency. It's been devalued inside the United States with buying power. I think we talked about that also in the green room, Swen and I. And one of the things is since they went off the gold standard, it dropped by like 97 up until COVID. I think it's probably 1% your buying power um, to like the dollar is probably at 1% what it was since they took off the gold standard with all the inflation and everything going on. So it's already been it's basically worthless at this point, which is why the cost of living is so high in America. I did comparison. I moved to Georgia because I'm dual resident, and I moved back to Georgia to teach and country of Georgia. and like my cost of living adjustment to America is like 50%, maybe even like as low as 30%. And I'm living the same standard of living I would in America. And like I said, my cost for everything, my electronics, food, everything is literally like half as much. Like it's anywhere from like 10% less to 30% to like half, because the service cost is a lot lower, and taxes are lower. That's the only reason why. Otherwise, it wouldn't be advantageous to stay here. I just stay in America, and my dollar goes a lot further here because the currency exchange. So that there's some advantages to that, but that strategy might change if they issue a digital currency. Because again, that digital currency would basically be worthless outside the United States, in my mind, based off of what I've analyzed. Um, yeah. So yeah, so I went over part four of a dollar collapse, what would happen or what would be the result, or the precursors to it. Mass migration was one of them that we talked about. The mass migration is also dealing with like the mass migration in the European Union, like what's going on now, mass migration into the United States, what we've been seeing for the last 2 decades. And that's a result of, food, energy inflation, and currency collapses, other fiat currencies that are collapsing prominently, like South America, like with Venezuela. So then there's civil unrest and revolutions. This is so history shows us that revolutions are usually economic first and ideological second. We see this from the French Revolution. So the subsidy removal and currency devaluations are flashpoints, again, like the French Revolution. So even developed countries face strikes, political radicalization, and loss of institutional trust. I don't think we're at that level yet in the United States. We're close. We're getting close, but I don't think we're at that level yet. Um, and then there's major volatility in global commodities. This is already happening. This one's already happening. Commodities become monetary hedges, strategic weapons. Bitcoin 100,000, gold 5,000, silver hitting $100 an ounce. And I said that when silver hits over 100 an ounce, gold hits over 5,000, and crypto goes over, like Bitcoin goes over 100,000, that's the end of the dollar. It means that the volatility in the commodities market is just, it's out of whack. And it just means that to expect violent swings in oil, gas, and grains, silver, and copper. This is going to be a weaponization of the supply chains, which we're starting to see with the trade wars and the tariffs. We're currently seeing that. That's why Trump invaded Venezuela, that I said before, to try to cut off supply chains to China. So China now has to talk to Canada to get oil because they were getting oil from Venezuela and they can't get it anymore. Resource nationalism. This is what's going on in the United States. This is what's going on in Europe. Europe is kind of an opposite of that. They're refusing to take Russian oil, creating a nationalization of their oil and their energy grid. And now they're telling Trump is telling India to not buy oil from Russia. So this is all part of that. And then there's invasion of sovereign nations. This is conditional but possible as a dollar devaluation or a dollar collapse. Wars of necessity, not ideology. We saw this in World War II. As a result of the Weimar Republic, they had to start invading countries to get their gold and resources because they had no money to pay off the debts that they owed from the Treaty of Versailles. Well, I didn't even pronounce that correctly, but you know what I mean. So wars of necessity, not ideology. This includes securing energy, securing food, and securing trade routes. We saw this with Japan when they started they attacked Southeast Asia, and then America got involved because the embargoes.
Yeah,
And
it's
then
petroleum, it's oil.
correct. So these happen when diplomacy fails and survival calculations take over. And this is what we're going to see in the future, very near future, probably. So these are things to come, things that have already happened. So things that already happened, like collapse of global markets, is to come. Regional conflicts was already happened. Trade wars already happened. Mass migration already happened. Civil unrest and revolutions to come. Major volatility in global commodities has happened. Invasions of sovereign nations has happened. And then World War III. This is the most understood part of this breakdown, because the dollar collapse does not automatically cause World War III. It's not the cause of it; it's the culprit to World War III. If certain parameters and certain conditions are set, as I went over. So these are more likely in long era of fragmentation or overlapping conflicts. So these are like the forever wars. So forever wars, like these proxy wars, become regional wars, become major wars that happen over a period of time. That's when you have a global wide World War III type scenario. So again, proxy wars, cyber warfare, financial warfare, regional wars that could escalate into great power red lines are crossed. And we saw this in World War One and World War Two. And we will see it in a World War III scenario, but I don't think we're at World War III. Gerald Celente says we're in World War III. Judge Napolitano. What's the other guy's name? Scott Diddler? I can't remember his name. So
I don't know.
he believes it's we're in World War III. A lot of people, a lot of influencers and analysts that they believe in World War III. I don't think they know what they're talking about, but no, we're not. We're not in World War III. If we were in World War III, energy grids would be shut down. There'd be cyber attacks on energy grids. The United States energy grid would be shutting down. EU's energy grid would be shutting down due to cyber warfare. We're not in World War III, guys. Not even close. But we are headed that way if the overlords don't get their shit together and start saying, "Hey, we got a problem with fiat. It's all we have right now. It's all we know. But let's get this shit under control and try to get an alternative currency to go to so that we can try to stabilize the economy and stabilize the markets." But I think we're more concerned with Epstein files than we are with the economic situation and the potential for World War III. So it's a nice little diversion from the fact that we are in economic meltdown in real time as we speak. And we're going to get into this on locals. We'll watch a video and commentary and get deep dive into that for those that are following. Is there anything else you want to talk about, Sven, before we go over to locals?
Um, yeah. Well, everybody has to be prepared. Try to secure some guns in case violence gets really bad. Guns do retain their value quite well. In fact, it actually does go up, and they are not
Always does.
difficult to sell. Yeah,
Mm-hmm.
bullets too, and yeah, have a stack of canned food of non like food that doesn't perish so quickly, and that's it because these are real preparations that people have taken before in the past whenever this has happened before. So I'm just advising you to do as we've always done to endure through these hard times.
Yeah, exactly. Whew. More to come. Like I said, I've been covering the decline for 3 or 4 years now in podcast and Telegram group. Links are in the description. Join us on locals. Like I said, Rumble 3 gets you $3 off your first month's membership. And we're going to go over to there. And yeah, like, subscribe, share with friends. Yeah, get some coffee. Get some coffee. That's about it. I think we're going to be done with this. Let me get all this set up. Did you send me the video, Swen?
Oh yeah, I did.
Okay.
I did send it in the chat, which means let me just forward it to you though. It's also in the chat, but I'll send it to you.
All right. Yeah, we're going
Are we?
locals, right? Yeah, we're done.
Are we
We're
going
gonna go
to?
locals. See you guys. I will see you for the next podcast. And Avito Sen. Bye bye, guys.